How much dry powder do you have? How much can you commit?
We have, I'd say, in excess of $5 billion of available capital to seize on the opportunity, with existing pools of capital that are raised and allocating some of our capital away from low-risk opportunities to where there could be potentially much larger opportunity.
It's a lot of money.
I would say that we have a number of investors who are increasingly more tactical. So one of the things that's interesting, by the way, I commented in the evolution of the leveraged finance market, the growing alternative asset managers like ourselves and the sophistication of private equity, the investor base has gotten increasingly sophisticated too. And so I believe that were spreads to widen to 600, 700, 800, there would be a substantial amount of capital that would come in on the assumption that it was not for any other totally dislocating events in the world. If equities were down 30%, then I think that amount of capital would be lower. But I think if there is something that's particular, if whether it's Paul Tudor Jones or anyone else is right, and they certainly can be, I believe that there would be substantial capital. One of our biggest fundraising years was in 2009, right after the crisis, because investors saw the opportunity. So I don't believe we're in a position, again, to be down 30 points in credit. There's just not that kind of forced selling out there. But that doesn't mean that you can't be down in some industries 20, 30, 40 points. And again, my point earlier, when you have low coupon debt, in the old days when I started, high yield coupons were 13, 14, 15, 16, 17%. And so you made a lot of money just on the coupon. Today, when you're making 4, 5, 6 on the coupon, the price movement and that repricing of yield is really going to make a big difference. And so I think what is more likely is if you have a recession, when you have a recession, spreads will widen. I don't think there will be a lot of defaults, but I think there's going to be a lot of great opportunity in buying bonds at 50, 60, 70 that have just been repriced from 6% to 12% or whatever the yield might be, or 15%, and then either working with the company towards restructuring in 2022, 23, 24, or there'll be a rally back and the economy will be in decent shape and they'll be able to refinance themselves. And so, again, I think there's going to be lots of opportunity. We have a lot of capital committed today. We have a lot of capital on the sidelines that I expect we'll be able to draw upon.
$5 billion or more?
$5 billion or more.
$5 billion or more. And how quickly can you mobilize it?
We have it on hand. We have it
now.
We have delayed draw capital call. I mean, it's some of the money is in funds that are 10-day capital calls, but I mean we have subscription line financing to enable pretty much overnight financing. So we have a lot of capital available, and we're not alone. And again, when you have that capital available and we're just one party, and we're under no illusions that we don't think we're the only party, that is going to temper a massive sell-off because everyone is looking for the opportunity. And now, again, I think we can find it. I think we will find it. And if it's a major dislocation, then we'll have that opportunity even in a larger way.